Hello, Face. How's everyone doing today? And I'd like to welcome our viewers from investing.com. Hope everyone's enjoying the S&P recovery that is trying to terminate here. I want to start off with the euro. We're getting a little reversal day. Of course, cable's been outperforming. And on a short-term basis, we completed a 3-drive to a bottom formation here. So as you can see, confirm low, divergence, and here's your second divergence, well above 30. So the euro's really been dogging it. Could we retest the wedge line again? Of course, I would look for more of a pullback. And even if the dollar is still good and there's not a decent correction coming, I think 1460 is an important area. It shows up on multiple time frames in euro. There's 1460. Look, there's 1460. That allows for, a move back over 16. So the dollar also, if you look at it, it has a chance for putting in an outside day, because yesterday was an inside day. I like these setups because it sets up the potential for some type of outside day, which are real good reversal signals. Taking out yesterday's low at 9586 would do it, and thinking that there's at least some type of pullback to this moving average 9570. That's where we accelerated yesterday. And if that's the case, should be enough of a kick to get gold to crack 1300. It's been trying, and in fact, we had a very nice chart of the day yesterday by Blake, which shows the potential of moving up towards 1312. So we'll see. A lot of people are calling this a distribution top. It's like it's teasing you, short me, short me, short it. And maybe it rolls over. I've seen tops like that do it, but I keep thinking of all the bears who right now feel okay and somewhat comfortable that this high will not be taken out. I'm sure there's plenty of buy stops here and plenty of buy stops here. Gold's been outperforming the silver by a wide margin. As you can see, silver looks like it wants to roll over. Again, I think Steve and most analyticians would say this is not impulsive. It's just worked off over bought conditions here. See at the highs by basically just moving sideways in a 20-30 cent range. So we'll see if we're going to get the rollover with the market, with the metals here. And that's going to be important. I think the dollar has to come off to take some of to get this last leg up in the S&Ps, which a lot of people are had this 26 was a high there, 26, and we're pulling back. So this confluence of moving averages at 25.85 should be pretty big to see if we get a continuation move to the upside. I was thinking up towards here to here. So we'll see what happens into the weekend. I think a weak dollar would help it. Okay, help some of the multinationals on an export basis. And I think that this would help everyone who's listening to me right now. If you're interested in trading and learning about the markets and being part of a great community where we have 5 different methodologies: Elliott Wave, harmonics, basic technical, candlesticks, and macro. So rarely can you find this within one site, one team. And it's not just any practitioner of any of these. For example, Greg has won award after award on FX Street for his analysis. Andre's harmonics are really very nice hit rate. Most people know who Blake Morrow is. If you don't, you should get to know him. And here's the candlesticks that Steve Volge, who's one of the most disciplined traders I've seen. I've been around for a little while, a few years. This is my 5th year in the business. And then I think we have one of the best macro fundamentalists and technicians in Stelios here. So we have a promo going on, traders, and we do decent promos a couple times a year, and this is one of the best. So my recommendation is that you go for a 6-month plan, because I don't think you could judge anyone or anything in a month. Don't get married after knowing someone for 30 days. Take at least a 6-month or annual plan with them to see how they act in every season. So there's a little trading and life coaching for you. Okay, and also we have great partners that sponsor our webinar, and you can, I'm getting tweets on people getting their reimbursement check. So you go to Forest Park FX, they're a broker of brokers, and get a rebate check, or at least pay for your subscription. Almost said prescription. So it is a good prescription for becoming better. I teach surround yourself with traders better than you. So I walk my talk when I join this team. Okay. Because I'm good. But there are guys that are better, spend more time at it, analyzing. I'm focusing on bringing a lot of content and good interviews to the community. Have an interesting guest today who's a big believer in cycles. I think Ben is in the house right now. So Ben, looking forward to talking to you at the top of the hour. Welcome to FACE. And I went through your Twitter feed and some very interesting work that Ben does. So stick around for that. And then just back to the markets, and I'm going to throw it over to Blake. Still think that the VIX is trying to bottom out here, but maybe we get one more shot down if I'm right. And this could last into next week, maybe one more rally in the S&Ps after this pullback. I've been called a lunatic. Oh, no, not lunatic, lunar tick. And I do pay attention to eclipses. We have a full lunar eclipse on, I believe it's Monday when we're off here. You're out there. So so don't go out on the evening of the 21st, because I hear there's a Wolfman alert for the lunar eclipse, and we want everyone to be very safe and be back with us trading on Tuesday.
You know, I laugh about it now, but back when I first started in 1996, and I first started trading, and I got my investor, and he, you know, I trained with some great technicians, but he had me go to this seminar. We all went. Like I say we all, it was him, his buddy, my other trading partner, and myself. The four of us, we went to this like astrology / market timing seminar. It was
it Phyllis Kahn?
I can't remember. It was so long. It was 1996, and I was young too. I mean, I was 20, I don't know, 26, 27 years old or whatever, and just embarking on my trading career. And
you're still young. You're still young at heart, buddy.
I'm sub 50, so I'm still young. Yeah. But I was sitting there. I was sitting there going, at that time, going,
what a bunch of junk.
What is? I mean, I thought I was like, you know, people are going to start getting out like beads.
New age.
Yeah, like start dancing around and stuff. I'm like, what?
A snake. You thought you were like in a cult.
It was very much, very cultish. It was so weird. But you know, I think I don't know if there's validity to it. I'm obviously, you can call me a little bit of a skeptic here, but anyway.
Right. Well, we'll see.
You know,
I've seen them more. I look at them. Sometimes, you know, it's kind of Gann stuff, and, you know, he felt time was more important than price, and, you know, kind of gives you a window anyway, you know, not to the day, kind of a window to be looking for something, a turn in the market going into that window. Of course, you don't do it blind because of a date. You still need, like, I would need divergences. I would need reasons to do it besides that day, but it's kind of you know, look out for this time period for something to possibly happen.
If you say so. Okay. Well, tell me when the next crash is coming, please.
I promise. Okay. After 2660, we'll get a retest of the low. So
26. That's
sometime in February, because you
Oh,
know what?
I thought you were saying 41 years from now. Okay.
No, 2660 in the S&Ps, and then take out the lows. And you know, one good fundamental reason that you could bite into, it's a blackout period for buyouts.
Okay.
Buybacks. Okay, so the support won't be there from the corporations who have been financial engineering their stock price during the month of February.
Makes sense.
Okay.
All right. Well, in the meantime, I'm going to just look at my charts and try to catch some of this news flow. So
into Valentine's Day, Blake.
Okay. So we have the cable. Just if you guys aren't paying attention, we're right up against trend highs, and you know, if you're short the cable, you're probably starting to think this is getting dangerous, because if we get above 130, I know I tweeted this a couple of days ago. I said, you know, if we get above 130, it doesn't really matter what, you know, if you're short, it doesn't matter what you're thinking, or what matters is probably going to be momentum, price action. And so I think you got to keep a real close eye on the cable here. We are nearing some pretty important resistance as far as I'm concerned. And so if we start breaking above these highs, it's going to start squeezing, and then we get above 130, and then, you know, we can obviously really kickstart like a formidable squeeze, I think. So I think you got to pay real close attention to the pound and what's happening here if you're trading. And I'm sure anybody who's trading the pound right now, and if they're on the short side, they have like nice little beads of sweat balling up on top of their forehead at the moment. So remember that this pullback following May's, the Brexit vote, tested the 38% retracement. We closed above it, and here we are nearing trend highs. My assumption is we're going to break higher, but you know, obviously I want to see the whites of their eyes at this point. So you know, this whole area, let me draw it out for you guys right here.
What a 1 week move. When's the last time to put a weekly candle? I mean, when's the last time you saw a move like this in a week?
Oh yeah, and remember, we still have another day, so I mean, we could really end up closing at the highs of the week and breakout territory, and that's going to squeeze the chimichangas out of people.
How about this? The shorts will be squeezed so hard their eyeballs will be popping out.
Could be, yes, yeah, exactly.
Head in a vice.
Okay, so we got the cable that's moving up now. The euro is not you know, doing much. It's just kind of sitting here. But let's also understand, and if you use ForexAnalytix, you know this from last night. So ForexAnalytix basic technical analysis, you go over the daily, and it says end of day analysis. The euro dollar closed the session below 114 level and may not see much support until the 1315 level. Keep in mind, we are testing the broken trend line from April 2018 to December 2018 currently, which could lend some support, which it is. I mean, right now.
That was also on the support level, Blake. On that, you had it listed as support number 1 on the site.
Got it. Yeah. Right here at 1370.
Yeah, right there. So you know, some people don't. You got to use these tools.
Yes, and these do get adjusted every day, and they're manual. You know, that's the thing about ForexAnalytix. It is all manual. It's not algorithmic. The only thing that's really algorithmic is the bias, and we take the bias basically based on, you know, the charts that are being uploaded, whether they're bullish bias intraday. Obviously, intraday has less meaning than you know, a daily or weekly trends, but the FA biases are all algorithmic. Everything else, like the charts, these indicators, support and resistance levels, these are all updated throughout the course of the day, and the levels are supported or changed each and every day as well. But what I want to point out is the euro dollar is kind of lagging. So if you look at the euro pound, for example, the euro pound closed below the 200-day moving average yesterday. So let's go over to the daily chart. You see how we closed below the 200-day moving average. We are actually approaching the 618. So if the cable is going to turn, So, you know, you can go back and think about the pound dollar. If the pound dollar is going to turn, this is probably the place it's going to turn, just because we are at the 618 here on the euro pound. The pound dollar is at that 129.20. But like I said, if we break above these highs, it could get can get a little gnarly, especially if you're on the short side. Oh, the peso's about ready to break out, guys. I've been watching this one for, I've got a small position right now. I've been looking at this for a possible breakout here. And you can see that we are actually making our way above 19. Now, if you, again, I'm going to take you over to ForexAnalytix, so this way you can kind of read what is thrown out at you. Intraday, this is just a couple hours ago or an hour ago. The US dollar Mexican peso is in a down channel intraday, but the overnight DSI was at such a high reading, 88. The risk is that the Mexican peso may get sold and a break above 19 channel resistance is increasing. Shorts, be careful. Now, this was the chart. We're at 1897. Right now, we are above 19. Okay, so we're above 19. We're actually above 1901 now, and now we're going to start to squeeze. So, matter of fact, I just took some profits on the peso here on some longs because I got long at 1907. So I just took some profits there in that. So if you guys, you know, this one of the benefits of ForexAnalytix. Let's just go back and review. This came out 55 minutes ago. Here we go, an hour later. You know, the US dollar Mexican peso is up about 400 or 500 pips from where that was sent out. If you're in the chat room, okay, if you're in the chat room here, oops, sorry, gotta reload it when I move it like that. Oh, it was just doing it. So when you're in the chat room here, you know, you can see some of my comments from earlier. That's all of us here. I don't know where it was at. Anyway, it was about an hour ago.
Did you write it, Blake?
I did. I guess I can go over here and search.
Exactly. From. No, just type from, semicolon, and Blaker without space.
So yeah, thank you. So oh no.
Yeah, just type, you know, delete the space between from and Blaker, and put B with capital because it's case sensitive, and you're gonna get it.
Okay.
There you go.
Yeah. So thank you. So you can see that picked up 1/3 Salma. Salma, we call Salma, is Salma Hayek, but that's our nickname for the peso, just so you guys know. And then JT was saying nice 3 drive on peso, and I picked up 1/3, and that was, you know, that was earlier this morning, and now I'm out. And so, hey everybody, you're on Jumbotron. So where's Amir when we need a Salma GIF? Yes, we do post a lot of Salma GIFs up there. So anyway, before those pop up,
Matt is the specialist.
yeah, sure. I'm gonna go ahead and do that before they start whipping those out. So anyway, that's just kind of a little flavor of what we do here, and you know, just kind of you know, so you can kind of get a little early morning. This is like, you know, one thing about ForexAnalytix, and I want to tell you guys more so than anything else, is this is not, I like to call it like, this is not weatherman analysis. We don't do the, you know, we do an end of day recap, kind of what has happened in the markets, but we also kind of warn you about what could happen. But I'm not here to tell you the weather, and I'm not here to tell you, you know, this is what the market did. We're here to give you guys ideas before they happen, as they're happening, and that's the difference between ForexAnalytix and anything else that you're gonna encounter. I mean, it's one thing to go, oh wow, great, the euro went up and then down today, fantastic, but you know, the cable looking to break, you know, 129.25 and see 130. as early as today, possibly. Those are, actionable ideas, or the peso looks like it's going to challenge its channel resistance, and quite possibly break out because of, daily sentiment index is so high. Those are actionable ideas, and that's what we try to deliver here at ForexAnalytix. Speaking of which, I am short the Aussie yen, and I'm going to talk a little bit about this really quick. So, we've been discussing. Let's go to the S&P. And by the way, Steve's got a pattern in play on the S&P, as the S&P came up to the really close to the 618 retracement of the most recent move lower, 50% retracement of the all-time highs to the low. We're coming up into the resistance zone above 2600. Now, frankly, we've broken the ascending wedge. So if you guys are like, well, maybe we're going to get a little higher, we could, but the ascending wedge in the S&P has broken. Since Steve already has a pattern in play, I'm not going to go ahead and build onto that and put in another pattern in play. But this is a bearish development. So if you guys don't see it, this is bearish. Okay. So because the S&P is bearish here, as I alluded to on Twitter yesterday, and I don't tweet everything that I do, obviously, but I tweet a few things. I shorted the Aussie yen, and the reason why is because of its very strong correlation to the S&P. So you had the Aussie yen that basically has moved up to the resistance zone. Now, the resistance zone is spike lows from 2018, spike high rejection, huge drop off, back to rejecting the 78.50, and here we are rolling over. Risk reward right now, think about it. You risk above 78.50. It's currently, let's just say, roughly 78. Targets could be anywhere between 77, 76, 75, you name it, okay? Depending on what you're looking at and what your time frame is. You're risking, 50, 60 pips to make 100, 200, 250. Whatever. If you think it's going down to 70, whatever, then that means you're risking 50 pips to make 900. It depends what your time frame is, but the bottom line is this is a good risk reward to be short. And if can I get stopped out? Absolutely, I can get stopped out. We can run up above. We can get some deal patched together right now with China before their meeting on January 30th, 31st, and the Aussie yen could be right up in my face trading at 79 and stopping me out. That could absolutely 100% happen. However, I'm willing to take that type of risk reward. Risk 50 pips to make, or in my case, because I shorted it at 78.20, risking 40 pips to make 200, 300, 400 pips. I'll take that trade any day of the week, 10 times a day. Every day of the week, all right, if you can give me a risk reward of that. So what I'm trying to point out here is the Aussie yen is set up for a great short, and it may not work out, sure, but I'll tell you what, if we get below this channel support here, or if we break below today's lows, which comes in at 76, okay, we break below these lows right here, we break below those lows, Aussie yen is on its way lower, and then I'm going to even feel more comfortable adding onto that position. So S&P's looks like it's rolling over. The Aussie yen looks like it's quite possibly rolling over. So there's speaking of an actionable trade idea, there you go. Now with that being said, I'm probably going to pass it over to my colleagues here in a moment, but before I do, I want to ask Stelios, how do you feel about the cable here, Stelios?
Hi, good morning, everybody.
Good morning.
As we all know, Theresa May survived the vote of confidence, but she has a pretty big problem now because she only survived because the DUP stood by her side. But there is a problem because the Labour Party, Corbyn, and the Scottish National Party, they both said, yes, we will talk with you about how we move forward from here, but you have to take the no-deal Brexit option off the table. And the DUP have very different ideas about that. And in fact, only a couple of days ago, one of their senior members said that we should go for a no-deal Brexit, and that will make the EU negotiate again properly, which in my mind doesn't make much sense, but this is the way they're thinking. So we have one side which actually supports her government, without them she will fail, who say no Brexit should be an option and a probable option as well, and the other two sides on the other hand, who say we're not going to talk unless you take that option off the table. And what does she do? It's a tough one, and no wonder nobody wants to be in her shoes. So what do I think is going to happen? It's very difficult to know. I personally think there is going to be some kind of extension, although they denied it today. Theresa May said that there is not going to be an extension to Article 50. But I think there's no other way. Otherwise, they're just running into a no-deal Brexit without any preparation, really. That's what they've shown us. So what do I do with a pound here? It's very difficult. If you put a gun to my head, I'll still buy it against the euro. Mostly because I like it against the euro, because all these months and couple of years, it's as if the Brexit is really priced into the UK, but not at all in the eurozone, and it will have an effect on the eurozone.
The eurozone data has been so weak as of the last few weeks.
I agree.
And you got Draghi.
And Draghi has been dovish. Yeah,
very
and inflation printed again at 1.6. It's below target. There's no way they're going to be starting to hike in the summer, like they've said, unless something major happens.
Right. Okay. One last thing before I pass it over, and I thought this is really interesting about the government shutdown that I read. It was a reporter, like one of the White House reporters said, and I found it really interesting. So here we are, government shutdown, U.S. government this is almost a month, and the problem is for Trump is that if he continues to let we're already starting to see, economic data is going to start to erode, especially in the public sector, obviously, but it's going to start to erode precipitously, probably moving forward, the longer the government shutdown takes place. But if he concedes and he reopens the government, that shows he is conceding to the Democrats, and so he's kind of in a tough spot. And I thought that was a really interesting summation, because it's like, if you're Donald Trump, what do you do? Do you reopen the government because it's the right thing to do for the people, and therefore, being the right thing to do for the people, you actually are showing that you're conceding to the Democrats? Or do you continue to fight the fight and then watch economic data erode, and then eventually the stock market's going to start to take notice, and now your gauge of success, it's really going to start to weigh on your base, and you're going to start to lose political support. I found it very interesting, and quite a quagmire that President Trump has found himself in. So anyway, just some thoughts there.
He doesn't, so far though, he doesn't seem really pressured. I mean, he doesn't seem to be stressed from the government shutdown, Blake. As an outsider, at least that's how it feels.
Well, no, because I think ultimately, he's not feeling it, right? so I mean,
that's
anyway.
why.
Yeah.
That's why.
Does he really, I mean, honestly, does he really care that, that some people aren't getting paid right now? It's like, for him, it's some people are going to get shot in the line of fire, and, it's cost of doing business.
And all government workers are Dems, he thinks, anyway.
Yeah. Yeah. I mean, so right.
Anyway, he's got other things to worry about besides the government shutdown. Like Mueller.
But I really think he's in a very interesting position right now. So and it's going to be, I'm very interested to see how it all pans out. Anyway, I'm going to pass it over to you guys. Thank you very much, everybody, for being here, and don't forget to,
2 days left.
Yeah, you got 2 days left. That's right, 2 days. And then I'll see you guys in the chat room for those of you that are ForexAnalytix subscribers. Have a great one.
Okay,
You too,
Blake.
Blake.
Thanks, guys.
Good luck. I know it's a yen, bro.
Thanks,
let
man.
me remind people here that besides the offer, you can subsidize your ForexAnalytix account by using the services of our excellent partner for Spark FX. You get something for nothing, rebates if you are a US customer, or subsidizing your ForexAnalytix subscription if you are anywhere else in the world. And they work only with the best brokers, and they're excellent in what they do. So I seriously, I'm a client of theirs. I seriously propose that you have a look at the reimbursement program on our site. So, Coach, you wanted to say something? Go ahead.
Oh no, Steve. I'm just.
Okay. Stel, anything else besides the UK news that we just covered?
Not really. No, that's the only thing that comes to mind at the moment. We had some minor. Well, I mentioned the CPI, Euro CPI came in at 1.6, but really,
yes,
not much else to say. We are getting some numbers out of the US actually. Jobless claims.
We are
in line.
Yes.
So, fully fed, better than expected, but really, who cares about that at the moment? Right.
We had housing data as well, which is important because they have been underperforming for a long period of time. Do you have the numbers?
I don't see them as being released. I think they were supposed to be released, but because of the shutdown.
Yeah, fully fed manufacturing. Yeah, 17 versus 9.7 expected.
It's quite a volatile number, though. Yeah.
Yeah. It is indeed. Let's see. By the way, since you mentioned it,
prices paid is lower, new orders is higher. So it's
probably, but due to the government shutdown, we're not getting the housing data as it seems. And we don't seem to be getting the good trade balance either. Okay.
If you refresh the page, you'll see they have disappeared now from there.
Okay.
Anyway. Yeah.
Okay. Cool. Okay, so let's go. I mean, yesterday we had Andres, so I have quite a few things to show because we want to give him some time and space to show us his harmonic point of view on things. So let me start by saying that I'm also paying attention to the USD/MXN here. Blake mentioned it before. He showed it in the short-term chart, but even if you see it on a longer-term chart, which is the daily. First of all, I want to make sure that you understand that this is a huge kind of triangle, right? So there is more room for us to move towards this previous low, which coincides now with the triangle support. But on the other hand, the USD/MXN, we call that wedge up there because it was an ascending wedge and coincided with this descending triangle's resistance. We had a failure there, and since then we had that huge move to the downside. I mean, huge in momentum, and we went from overbought conditions on the daily to really oversold conditions. We hit roughly 20 in the RSI. So as you see, we're testing now this trend line. I do think that if we break above it, we can at least have some kind of a relief rally towards 1930. So I think in the short term that might be a nice trading opportunity. If we go down to the 4-hour chart, you can also see it here, and you're going to see that several pairs. Here it is. I'm looking at the longer trend line here, but you can draw other trend lines as well. In which case, we've already seen a break. But if we want to completely ignore like previous support resistance zones, you're going to see that this 1905 area is also quite important, 1903 to 1905. So USD/MXN, you see here on the 4-hour chart also some nice RSI divergence. So now let's go to another pair that I'm closely monitoring because I'm really interested in sorting. It's the USD CAD. I believe that this move lower is a textbook impulsive move, and this move higher so far is a textbook corrective move. As you see, it's behaving perfectly as you would expect. Yesterday, I actually issued an update when we were testing this flags support, and as you see, it held perfectly. So we didn't end up breaking down from there. We ended up rebounding. So I do think that the move towards 133.30, 133.60, the 38.2% fib, it's going to be a very nice area. If I see some kind of a nice reversal on the 4-hour chart. I'm going to start scaling in, looking for another move to the downside. Now, if we have a look, I'm going to stick for now to the 4-hour chart so we can see, some setups, have a closer look, and then I'm going to go back to daily. Now, if you have a look at the USD NOK, you're going to see that this setup is not as clean as the one we have in the USD CAD. So I would, between the two of them, I think, USD CAD looks better, so I'm going to stick with that instead of trading the USD NOK. But even if you have a look at the USD NOK, this can end up being, depends. We need a little bit more price action. It can also be a bear flag, or it might end up posting some kind of a pennant, right? So depends. We have to see. In any case, I think that if we push higher towards this 50% fee, previous resistance, previous support, roughly at 862, 863, 864, roughly there, that's going to be a good area to see some failure from the USD from the USD NOK as well. Now, if we stick on the 4-hour chart and we go to crude, which we know that it's very well correlated, you're going to notice that crude is doing the exact opposite thing because the correlation, of course, is inverse. What is it doing here? It's consolidating. Now, is this going to be a triangle? Is this going to be a bull flag? You can't tell in advance. I've said that a billion times. You can't tell in advance. You can distinguish the characteristics of a corrective move, but you cannot be certain in advance if that's going to be a triangle or if we're going to push a little bit lower. I would like to see a push lower towards this confluence of supports down here, in which case we're going to have a flag in our hands. But in any case, I do think that this move in crude is corrective. So I think, moving back towards 50-20, that low, is going to be a nice level for somebody to start scaling in, looking for another move to the upside, which, of course, when it happens, is going to coincide with, for example, the USD CAD finding a high and pushing lower once again. So I do think that USD CAD, USD NOK, crude are all showing the same kind of behavior, of course, crude inversely, which is a very nice a confirmation that the outlook for those markets is probably the correct one, right? Because I would be a little bit troubled if we saw different things happening in those markets that have quite a good correlation with each other. But now that I see them doing more or less the same thing, I feel quite confident, taking a trade here within the next. I believe it's going to be within the next few days that we're going to get that opportunity. Now, another market that is clearly displaying the characteristics of a bear flag is, I'm still staying on the 4-hour chart, is the USD Chinese yuan. Okay, so this is a textbook bear flag. 678 is resistance, but even if we keep on crawling higher towards this 682 zone, this might take a little bit longer. We might have some movement like that. That's also going to be a nice area to be looking for short. So I think that USD Chinese yuan also a pair worth monitoring, because I think that sooner rather than later it's going to produce some kind of a trading opportunity. Same deal applies with the USD yen. USD yen, I'm choosing to ignore this flash crash low for technical analysis reasons here. So I see two potential possibilities. Both of them can be interpreted as bearish. One of them, that this is a pennant, in which case I want to see a move below 108.30, preferably even 108, in which case I think we're going to see a move towards 106. There is also, though, the potential of seeing one more push higher towards perhaps the 61.8 and previous low here at 110.25, in which case, from a technical perspective, we're going to probably be talking about a bear flag instead of a pennant. In both cases, I think that the USD yen is going to end up producing a shorting opportunity. Okay, and not accidentally, as you see, The S&P is also showing some signs of momentum loss after reaching quite an important zone here. I can't rule out, we've already seen a breakdown from here, but I can't rule out another push to the upside, but I would expect that to be quite limited, and I would expect to see some move to the downside. Even if that proves to be corrective, I think it's going to be at least a move towards 25, 10, 25, 25, in which case, I can still find myself in profit. So, this is how I'm looking at the USD yen market and the stock indices. Nothing really changes. Let's go back to the daily charts. Nothing really changes by having a look at the rest of the US stock indices. As you see, Nasdaq did reach at its highs the day before yesterday. This zone, this confluence of resistance zone that I was looking for. So the Nasdaq has also reached, an interesting area. Same thing with the Dow Jones. Dow Jones did enter this area and tested these previous lows. Same deal with the Russell. The Russell entered this horizontal resistance area. Perhaps it has a little bit more space to move to the upside to test these broken triangles, support as resistance. But as you see, all of the US indices are either on or very, very close to resistance. Now, the DAX, as we've said, there is a bullish case scenario for the DAX, but for that to get triggered, we need to see a move above 11,000. As long as it stays below, you have to respect the downside. And FTSE, as you see, previous triangle support, we retested it and we failed from there, right? So this is when we're testing it up there. I said, let's see what kind of a pullback we're going to get. If we find support here, we might see a move to the upside. If we fail there, we might see a move towards the lows. This seems to be the case for now. And this is the Nikkei, by the way. As you see the Nikkei, potentially this is a pennant or, a bear flag, a pennant, doesn't really matter. First area of support we're currently testing. The move higher definitely doesn't look impulsive to me. It looks corrective. So this also tells me that the chances that the USD yen is going to fail soon from where it is are rather increased. So, I like the fact that the market has started aligning. Correlated markets seem to be pointing to the same direction, which is something that always gives me, extra confidence in pushing with positions, right? Blake already showed the Aussie yen. Let me show you another view of the Aussie yen, which is also pointing to the exact same direction that Blake showed. If you take a parallel of this trend line, as you see, this trend line passes from 4 different highs. If you take a parallel, from those two lows, you're going to see that we're currently testing that parallel as resistance. So, this is an extra reason that perhaps makes this area an area of interest. Perhaps this is an extra technical reason for somebody to believe that the Aussie yen might actually fail from this zone. And, having a look at the Kiwi yen, as you see the Kiwi yen anyhow, this move lower in the Kiwi yen was looking clearly impulsive in nature. So, the rebound seems to be failing. And obviously, if the Kiwi yen loses this 72.30 area and closes below it, I think we're going to head quite a lot lower from there. Let me see. Yeah, I'm checking for questions. Could you please have a look at Palladium? Yeah, Palladium. We were talking about Palladium with Stelios, a little bit earlier. Palladium has gone really ballistic, right? Palladium is tested earlier today. These channels high, and it has already pared back half of its gains. I would love to see some kind of a big bearish candle. Imagine if Palladium, for example, completely gives back all of today's gains and leaves behind like a bearish candle with, a very long higher wick. I think that's going to be, a queue. As you remember, I definitely expected the break higher because this was a bullish consolidation, but I thought that this thrust higher might be, the final one. Let's see what how this daily candle ends up looking, and we can discuss about palladium tomorrow again because really palladium is overdone. Let me actually see if I can pull.
Steve, if I may add
yes,
something, which the two of us talked about before, but it's good to mention here. Palladium has been surging higher, mostly on the back of a squeeze on physical palladium. This has nothing to do about supply and demand in terms of industry and all that. If you look at the futures curve, it's in big backwardation, so people are paying lots of money to get physical palladium, like 1 month, 2 month, 3 month rates are much higher than forwards and further forwards. So really,
my question is, have you ever seen a 96 reading in palladium before in the DSI?
I don't think so, no. But yeah, it's due to reverse. But really, unless this short squeeze in the physical palladium ends, I don't think it's going to happen. But eventually it will. Eventually.
Yeah, but I would not be buying palladium up here with a 96.
Absolutely not. Absolutely not.
Yeah. Okay, so this is the DSI. As you see, it's by far the most extreme reading we have on the whole DSI board, the 96 reading in palladium. Okay, so as I said, I want to see some kind of a big reversal signal, and we might end up getting one today because we started having like a monster day to the upside. We've already given back half of the profits, and imagine if we close near the lows. I mean, that's going to be a huge, huge warning signal. And I'm not going to be the only one that's going to be looking at that candle at the end of the day. You understand what I mean? So yeah, palladium, it's it's something that is worth monitoring very closely because it might produce some kind of a huge reversal now that everybody and their dog is like along. And as you said, there are actual reasons, but regardless of what happens, I mean, there were actual reasons for crude to sell off, but crude at some point reached $25, $26, and at that point, no matter what, you needed to see some kind of a reaction, and we saw like a huge reaction. So palladium, yes, it has had a major squeeze to the upside, but all squeezes end at some point, and I don't really care what the catalyst is going to be, but we've seen this kind of moves before, and you need to be careful, of course. It's trying to catch falling knives, or the exact opposite, which is happening here. Is a game that needs very cautious money management, but it's and you definitely need to see some kind of a signal first. But I think we're getting there. So let me see what market happened. I agree with what Blake said about the cable. I wanted to say that. But on the other hand, I have to say that the cable is still holding in this ascending channel. And given of all the event risk that is unfolding hour by the hour, I'd rather just stay the hell out of it and let it do whatever it wants to do, because at the end of the day, it's still holding within a descending channel, right? So we haven't seen it do much. The market is definitely short, so yes, there is always the potential for a squeeze higher, but we're not there yet. We're not there yet. So I think there are much better opportunities to invest your capital, your trading capital at the moment, than chasing after the cable. That's my personal point of view. Of course, everybody has their own viewpoint in the markets, and it's absolutely respected. But I'm here to give my point of view, and this is my point of view. Now, let's have a look at the bonds, which we haven't done in the last couple. It could be interesting for. Let me see what Costa says. Netflix report tonight. Yes, thank you very much, Costa, for reminding me that. Not reminding me about Netflix, reminding me because yesterday, one of the things I wanted to show was several of the US stocks, right? So Netflix, let's see if this is going to be some kind of an island reversal, because as you said today, we have earnings reports. Estimates are of 0.24 earnings per share. And as you see, so far we've had a technical break of a confluence of resistances. It's this descending trend line resistance and the 61.8 of the move lower. So today we're going to find out if this was a false break higher, in which case we might get an island reversal, because we might gap lower tomorrow and leave the last 3 days. I say 3 because we haven't had today's price action yet. We might leave like an island, a false break island up here, and then gap lower tomorrow, let's say somewhere there, and then move lower once again. That's going to be a very, very, very bearish signal. But of
Amazon
course,
looking better too if we don't get the gap down. That's the one thing that gives me pause about selling this rally.
Don't be in a rush, coach, because I'm gonna show Amazon as well. I actually intend to show a lot of these stocks. I have to say that Apple is also looking like a good buying opportunity down here if you're looking to be long, because we are finally, we in essence, more or less, let's say we held the 61.8 because we just traded below it like for the duration of a day. So this is like a major level, and we seem to be breaking above
That
this.
looks like an exhaustion gap that it filled.
It does, but I want to see a move above this 156 level, okay?
Yeah.
But it does look like we also have RSI divergence, so it does look like Apple can end up having a relief rally from here. One of the companies that looks the best is Microsoft. The reason I'm saying that this one is one of those that is looking the best is because, let's be very honest, the move in Microsoft seems 100% corrective.
And tame comparatively.
It is a corrective move, right? I'm not a perma bear. I'm looking at the charts and I don't really care if they're bearish or bullish. I'm going to say what I see. You know what I mean? And what I see here is a chart that looks rather constructive. I have to say though that we're currently testing a triple confluence of resistances. So buying Microsoft exactly at this level is not a smart idea, right? But in general, the move so far lower so far looks corrective. Now, let's have a look at NVIDIA. NVIDIA was literally battered down. It was destroyed. After such a huge move higher, once we broke below this wedge and channel, we literally started dumping lower by the day. As you see, we've left behind unfilled gaps, but we did find support in this confluence of the 61.8 and previous resistance area, and we are making an effort. There's definitely some loss of momentum. As you see here also on the daily chart, there is some RSI divergence, which is also worth noting. That doesn't mean that NVIDIA looks good. It looks worse than others, but it means that it might rebound somewhat more. You mentioned, Coach, Amazon, and this is one of the stocks I wanted to show. Why? Simply because I was looking at this. Okay, this has already happened. I was looking for one more low back there in Amazon, and that actually transpired.
Nice 3 drive down there.
Yeah, and as you see, nice RSI divergence as well here, and we found the confluence at the 61.8 and previous support area here. And as you see, we are making an effort of breaking above this channel of resistance.
200-day right there.
Yeah, but the 200-day did reject yesterday, so let's see what's going to happen from here. But I have to say that the move lower in Amazon, given this stratospheric push to the upside, can also be viewed as corrective, right? So all those are indications that there might be more upside in stocks in the medium term, right? In the medium term, because I believe in the short term we're going to have some type of a pullback. So I wanted to have a look at those stocks. And Facebook, let's have a look at Facebook as well. There is Facebook. Facebook also, after displaying some loss of momentum, as you see, it's now for the first time after a long period of time is testing, is actually producing a higher high after a very long period of time. So it's looking somewhat better, although worse than other stocks. So if I had to buy some of them, Facebook and NVIDIA would not be in the list of preferred stocks. So some of the others I showed, I think, look much better than Facebook and NVIDIA look. But And let me add to this that fundamentally speaking, I told you a long time ago when Facebook was almost at the highs that what happened with Facebook and the change of privacy rules is something that will definitely hurt the business from this point on. So, fundamentally speaking, this is a big headwind to Facebook's performance. And the same applies to NVIDIA as long as cryptocurrencies don't manage to regain their previous, and when I say previous, I mean last year's, popularity. Okay, which I think it's very likely that it's not going to happen. Speaking of which, let's have a fast look at them as well. I have to say that I expected, something better here in Bitcoin. It's not impossible to see, another leg higher because this simply might be a channel. So, the most bullish way of looking at it now is looking at this as a channel, in which case, we might see another push to the upside. But I have to say that
33.60, Steve, is 78.6 back. It's kind of an area, bouncing nice off their 61.8, maybe 78.6. Yeah, where you have your circle. Yeah.
Yeah, and here is Ethereum, which did break, above this channel. My target was 170. It didn't make it 170. It almost made it there to 163. Price action definitely doesn't look impulsive in any way. That doesn't mean that it can't push higher once again, but definitely that's not the price action that cryptocurrency bulls would want to see. They would probably would like to have seen some type of an acceleration higher. Here's USD-SEC, by the way. If you remember, I told you that USD-SEC is not, the currency you should be buying against.
If people recall, Steve did call the bottom in Bitcoin within, I think, at the day of the low or within a day. So,
Yeah, it was a nice. Thank you. It was a very nice. It was a very nice wedge. It was a textbook descending wedge. Here's CAD Yen, by the way. CAD Yen, also produced some kind of a wedge. I think that there is the possibility for seeing one more push towards 83.40, but in general, I would expect this rebound sooner rather than later to fail and get more downside. So CAD Yen is not a pair I would be looking to buy, despite believing that it might have a little bit of more upside. I think it's rather a pair you would be looking to sell once we get a nice signal that it's topping out, which I think is going to come sooner rather than later. By the way, Coach, we do have an interview, if I remember right, today, don't we?
Yep.
Okay.
Ben Maldonado. He's a proponent of market cycles, so it should be a great one. I'm looking forward to
market cycles, quite an interesting topic, actually.
Yeah,
and
I think he's on the same page as you. I went through his Twitter feed today with your resistance level up here in the S&Ps.
Okay.
So we'll get some pictures from Ben.
I'm curious to see what kind of cycles he's monitoring, because as you know, there are several type of cycles in the market. So, from commodity to general cycles in the market.
Kondratiev, there's a million of them.
Yeah, Kondratiev is a 50.
And let us not forget menstrual. You're married, it anyway. So
sooner or later, this show is going to be transformed to PG-17 or something. So thanks to you.
All right, buddy. Lunar eclipse, and cycles are everywhere. Yeah.
Okay, good. So if your guest is here, you can go ahead. We're at the top of the hour.
All right, good rundown, Steve. Ben.
Thank you.
Stell, nice rundown. Blake, always. Ben, really looking forward to meeting you. I'm making you the presenter. I noticed you've been here the last couple days, and looking forward to seeing your work, buddy. So all you have to do is activate your mic, and you have a screen share there, Ben.
He's calling in. I unmuted him.
Okay.
Can you hear me now?
I hear you, Ben. How are you, buddy?
Doing great. How are you?
Very nice to meet you. I appreciate you taking time to be with us today. I noticed your work on Twitter and said, boy, you know, I'd like to talk to Ben, and some unusual things, you know, people would call it unconventional, some of the work that you do. Notice we have a mutual friend in Victor Zuberov, who also is very esoteric. And I'm curious, how long have you been doing this, Ben? And what was it like at the beginning? How did you get started, and why did you gravitate towards cycle work?
Sure. I'll go all the way back to the beginning. It all started when I was a kid. I was obsessed with sports and still am.
Yeah.
I think sports is fascinating. The whole competitive atmosphere and these guys performing under pressure and the ladies performing under pressure, it just fascinates me. So
Right.
I started with that, and I became fascinated with predicting the outcomes of games. And in a way, it set me off on the wrong path, because that's all about ego, and that's all about being right. You know, being able to tell your buddies, "Oh, I knew that was going to happen." And
Right.
I studied the stats and how the players did, and all these different things, and that started me off. And I said, "Oh, I can bet on this." So in middle school, I ended up losing all my savings and birthday money by betting on football through my uncle's book. And so that was my first form of tuition, if you will, in paying the price for trying to figure out an unpredictable event.
I hope the kids at school shared their lunches with you, Ben. You know, I mean, what a young age to get humbled in, you know, forecasting. Very young age. So what happened? What happened after that?
From there, you know, I learned that somebody was winning, and it was the bookies, because they had that edge, right? They had the juice that you had to pay. You go 1-1, and you still owe them money. So they had an edge. So I just kept thinking to myself, how can I get an edge? I need an edge if I'm going to win, because it's clear the only way to win is if you have an edge.
Right.
So I read an article about these two brothers in Las Vegas that owned a big casino, and they started out with a single slot machine. And slot machines had a really nice edge, so they started from there. So I sent a letter off to a slot machine manufacturer and asking them if I could buy one of their machines, if they would sell me a machine. The idea was like, well, I'm going to put it in my basement. I'm going to have my friends come over and bring their quarters, and when they came over to play, and I'd make some money. Well, I got a nice letter back from the manufacturer saying they couldn't sell any machines if I wasn't in Las Vegas or Atlantic City, because it's the only places where gambling was legal. So again, I was thwarted, and I said, okay, back to the drawing board. Got to think about this. Well, fast forward to college, where I started taking statistics courses, and here my eyes got open to the concepts of expected value, standard deviation, probability distribution, et cetera, et cetera, et cetera. And so through the community and the curriculum that I took at Wharton, I started this lifelong fascination with the financial market. They'd bring speakers in, and they would tell how, you know, they invested in this company, or they bought this stock, or they traded this, and they did that, and they made these fortunes. So it really excited me and started me on this path. And after college, I worked as a broker, and then I began trading my own capital in 2000, in addition to doing some venture capital investing and real estate development. And at that time, I was trading with an edge that was non-existent. I was trading based on the fact that I had gotten lucky in the big bull market of the 90s, and totally confused brains with a bull market. I lived and died by the motto that diversification was wealth preservation and concentration is wealth creation. That was my big thing. So if I believed in something, then I was going to go in big, right? Go in big, make a lot of money, and then get out. Well, being young, cocky, aggressive, and clueless works really well in a bull market. It can work out for you, but it's a recipe for disaster in a bear market. And I ran my trading account up to into 8 figures in the early 2000s. But by the bottom in 2009, I'd completely blown out my trading account, and it was starting overtime. So the death of my
where did you find the will and desire to start over, and did you take some time to reflect, contemplate before you step back up to the plate?
It's a good question, because the death of my trading account put me on a path of trying to understand that it's not about being perfect or predicting the market perfectly to be successful. It's not about being right. It's about getting it right. So I had to do this sort of journey of introspection and say, okay, what's going on here? Why am I doing this? How is it serving me to try and do this and to blow up an account? Why did I do this? What was the lesson there? So I did take some time, and I went through a process of introspection and with mentors and education and refusing to quit. I was able to build it back up and really get on the right path and find out, how to engage with the markets in a way that is not harmful to me or my family. And a couple months ago, I think you had a guy on who was talking about, he'd blown out several accounts. And
Peter.
Yeah, he had life insurance, and he thought about suicide and how he could fake his death. So I'm telling you, I had those same thoughts. When he was talking, I was like, wow, I get that. I understand the depth.
Yeah.
And it's a part of the journey. It's how we all get there in different ways, but if you're going to be successful, you have to get to a point where you're broken down enough to where you realize you have to change, you have to do things different. Unfortunately,
in every area of our life, usually.
And I think that's
not just trading. So, God, what a great story. So, you went through this period. It's almost like a grieving process, right? It's a loss of money. Yeah. So it's not a person, but it's something that you worked hard to do. So was that when you started looking for an edge, and cycles became some type of epiphany for you after that?
I mean, yes, because throughout all of this sort of boom bust experience that I had financially, my fascination with sports was constant. It was still there. And in watching sports, I would notice how, at certain times, these elite athletes who could regularly perform at the highest level and do incredible things, sometimes they're just god-awful. And when I saw that, I said, how is that possible? Something is affecting them. There's a cycle. There's some sort of force is affecting them that is creating these variations in performance. And I use Tom Brady, for example. He's arguably the greatest quarterback of all time. And there are some games and some Sundays where he couldn't throw a ball in the ocean off a pier. And you're like, what happened? How is this happening, God?
Yeah.
And this is what led me to cycles and sort of this lifelong journey of discovery that's ongoing. Cycles
very hard to stay in a peak performing state, which you really almost need to be in as a trader, and no one can do that all the time. So did you kind of get in touch after, using the metaphor or example of Brady, that us as individual traders also have our cycles? And have you learned that when you're, say, for example, you have the flu, or there's some type of crisis happening in the family, that it's okay to lay off the market because you're going to be like Brady on his off days?
Absolutely. And I think, Dale, you hit on the key thing. It's understanding yourself and understanding your own cycles. And for me personally, I'm highly susceptible to FOMO, the fear of missing out. And so I know that. I know that's a weakness of mine, and that's something that I have to combat all the time. And so in 10, 20 years ago, when exactly something happened, there's a problem in the family, I didn't feel well, I didn't sleep well, I was sick, under the weather, whatever was affecting me, or I was at the bottom of one of my own cycles.
You still forced it.
Right, I have to work, I have to trade, I'm going to miss something, you got to be there, you got to be the breadwinner. And 99 times out of 100, I would regret it because the performance would be horrible. And so you learn to listen to yourself, listen to the cycles, and take the time when you're not at your peak.
Okay, so cycles probably, I'm just guessing here, Ben, helped you with that FOMO, because cycles are about time and time windows, and it forces you not to take any action until you enter one of those time windows. Is that correct? It helped you avoid FOMO and taught you don't always have to be in the market because, cycles, depending upon duration, don't happen every day unless you're, really looking at short-term stuff. So was that really the edge that you were looking for in grade school and college, that cycles are giving it to you now because you've had to be patient, not learn to be patient, but to follow your own work? There's times that all you're doing is watching the market instead of trading the market.
That's right. And the cycles are a big part of the edge, and it was the basis of sort of this journey that I started on. It sort of has led me to today where, along with my trading and business partner, we've created sort of a systematic way of engaging with the markets. And we call it the Holy Trinity of trading. I have 12 years of Catholic school, so I can't get away from it. But this is the Holy Trinity of trading, as we call it. You got the Father, the Son, and the Holy Spirit. The Father is find trending markets. You got to find markets that are moving. If a market's not moving, you stay out. And how do we do that? You do that through structure, where you've got either consolidation phases or impulses. You want to be in the markets when it's impulsing, and you want to be out of the markets when it's consolidating. We use Gann squares and ellipses to find beginnings and ends of things. When does a run end? When does a leg end?
Do you have a wheel? Do you have a Gann wheel?
I don't use the wheel. I use more of the squares.
Okay.
But there's a lot of people who do use them. Can you all see my screen? Can you see the screen?
Yeah, we got it. We got it up there with all the cycles and everything. So maybe you could talk about 1, 2, 3, 4, 5. Is that an Elliott wave pattern that you also integrate?
No, it's not. Okay. This is not an Elliott wave. What this is an example of sort of the structures and the ways in which we approach the market. Using trend lines. I see, on all your presenters' charts, lots of trend lines. Trend lines are a simple tool, but they are incredibly important and incredibly effective. So this chart shows these dynamic pivots that I usually post on Twitter that people have found very helpful. They're really good at helping to define sort of the bull-bear line in a trade. And these examples are not hand-picked. I just took the last 3 days. So these charts that we'll run through are going to screenshots of the last 3 days that I'll show you. So here we're looking at Monday. These are the lines. You can see how the trend lines, once we break out, we come back and retest the trend line. Here we came down, tested a pivot, tested a trend line, moved up to the next area of resistance. It resonated around that, came back, and created a trend line off of that. And so it's simple stuff, but it's super effective. Here's the use of ellipses for things we talked about with targeting. If people aren't familiar with how ellipses work, essentially the borders and this major line here are areas of support and resistance depending upon how price comes into them. And these are all 4-minute charts, by the way, so it's very short-term stuff here. You can see the different spots where we get support or resistance. And this is using
never used them before, but they look interesting. I think they're also available for people on MT4 and TradingView. It's a pretty common tool that I've never really investigated.
Here's another view of ellipses with a Gann square. Showing the 90. This is a 90 up, 90 in time, 90 in price. When you get to areas like this where you got a 90 and you got an ellipse, that's a pretty significant place to take profit.
So you also look for confluence of, the ellipse and again Times Square and pivot. The more reasons. It's almost like being a lawyer, isn't it, Ben? I mean, you build a case for a trade. If you only have one piece of evidence, it's not as good as if you could do what Robert Mueller's doing.
No, that's right. You build, because it's not about making a 100% sure call. There is no such thing in the markets, and the turning point for me is when I gave up that belief and that desire to have 100% certainty. It's about probability, and the more evidence you can line up, the higher your confidence and the higher the probability that you're going to have success.
I'm also guessing on your journey with some of the experiences that you had that you had to find some type of risk management discipline for when, like you said, not everything works all the time, so that you would get out of the way, which is a hard thing for people to do. Some people say, well, I'm using a mental stop, and then it gets to that price level and they say, well, you know what, I think I'll let it work another day, or it gets near a stop loss order and it ends up being a CIC, cancel if close. Why don't you talk to us about your discipline for when you're wrong and how you manage those situations?
Okay, so the second member of the Trinity is the Sun, which we have. The first is finding trending markets. That's the father. The son is minimize risk at entry.
Okay.
Anytime you put your capital in the market, you have to know a predetermined risk amount that you're gonna say, okay, this isn't working, I got to get out.
Bingo.
And how do we?
So you know before you pull the trigger what the contingency is that's getting you in the market, and if that's negated, you're gone.
Absolutely. And the dynamic pivots that I post are one of the ways in which we minimize risk, because we know these are energetic points in the market where if the market gets through them and stays on the other side of them, you're wrong. You got to get out. You got to move away. So those are ways that we minimize risk at entry. Trend lines showing support and resistance. Fantastic way to minimize risk at entry. Number one, it can define risk for you because you know when it breaks that, you're not in the right position. You're on the wrong side of the market. But it also helps you understand support and resistance in areas where you can potentially buy or sell. So that minimizing risk at entry is a big part of the process.
So would you say that your cycle work is based upon Gann, or is there something that you've tweaked in your cycle work, like on the first chart that you had all those ellipses on there, or something like that? Where did you learn cycles? Was it from a mentor, or was it from a book, or was it Dewey? I mean, there's so many different types of cycles to follow. What's your cup of tea?
I think Gann is the starting point for sure.
Okay.
It opens your eyes to where cycles are, how they work, where to look. So I would recommend anybody that's interested in cycles start by reading a lot of Gann. Find a mentor. Okay. Find somebody who can push you off into a direction and get you going and looking and researching. And it takes time.
Did you have one?
Yes. Yeah. My business partner is a partner and a mentor, and he's helped guide me into, pushed me into certain directions that I've found things that, have amazed us both. And the stuff that he's done is fantastic and amazing as well too. So.
So an angel found you, which goes along with your, spiritual background. So you have your mentor is somebody who also believed enough in you to take you under his wing, and you're part of you guys work together now. That's really a blessing. Because you know what
Absolutely.
people go through, Ben, on the internet, looking for good people, and you know, everyone has a secret to trading when, you know, there is no secret except hard work and perseverance, right?
Absolutely. Absolutely.
Okay.
I could not agree with you more. And now let's talk about the last part of the Trinity, which is managing the trade and taking profit.
Okay.
Here again, this is incredibly important. Greed, just like FOMO and fear of losing money will hurt you, greed will kill your account. It will absolutely kill your account, because then you get in this cycle of, well, I didn't sell it where I wanted to sell it, and now it's below, so I got to wait, and then it goes below, and then a profit turns to a break even, and a break even turns to a loss, and that I've been through that cycle.
How about this cycle? You know, greed is one. How about for people that maybe had went through a long period of being unsuccessful traders, and their entries are excellent, but they have what I call first daylight syndrome, where they don't ride the trades to their potential because they're really not used to being right, or they've been, you know, psychologically wounded, and when they see it, they take it. And they may be doing okay, but they could be doing a lot better. How do you how would you mentor, if it was me, which it is, how would you mentor me?
So here's the way that we do it, and I think it would work for you, because it sounds like, Dale, you have a lot of the same proclivities that I do for a little bit of self-destruction. You take trend lines, use trend lines to define these impulsive legs, right? You break a trend line, it's over. So you take the money and move on. Cover risk. The concept of covering risk frees you mentally so much, it's incredible. And what does that mean? If you've got a position and you're risking 5 points on that position, when your whole position goes up 5 points, take half off.
Okay, that's what I've done. All right, that's what I've done to ameliorate it. So you're a believer in partial profits too, because then you're in a no risk position. You have probably tighten up your stops to near break even, or maybe use a market stop that is going to be tighter than when you initiated the position. But partial profits is something that's part of your program.
Absolutely. And I think targeting also helps, because remember, the market is so big and so undefinable, right? It can do anything at any time. Our goal is to narrow those possibilities down by using all the techniques we can to define it in a way in which we will engage with it if it meets this criteria. So targeting helps with that greed, or that fear of missing out on more profits, or selling too quickly because you're afraid it's going to go down. Use the ellipses, use the Gann squares, use these other tools, support and resistance, to help you target. So you say, hey, when it gets to here, I'm going to let some more go. And you're never going to, one of the biggest things for me was this desire for perfection. You're not going to be perfect in the market. You're not.
I'd say don't expect perfection at the craps table, but you know,
I gotta let it go.
Yeah, let me ask you this: on your Twitter feed, I saw you talking about a super pivot, or a level that's super. What makes it super?
Well, number one, what makes it super is the way it performs. They are absolutely fantastic spots, and this is a live chart that I have on here on a 4-minute. Our super pivot level this morning is 2605.75. I've watched these things for years now, and what happens is they will define. There's energy associated with these spots. They are price and time cycle-based levels that we have developed, and they're dynamic. They're changing all the time. The whole thing about using them is, as a price crosses it and then comes back to retest it and fails or holds, it tells you where we're going to go. So right now,
you wait for retests and either confirmation or false breakouts or breakdowns.
That's right. So right now, look, you can see on this 4 minutes, the setup here is we're crossing down below this pivot. As we come down, if we can pull back up into it in reverse, you want to be short on that.
Okay. Okay, so we got to your one-year super pivots. I think it was 2620 area that I saw on Twitter. Do you have any? I see you're showing a lot of short time frames. Are you mainly a day trader, or do you have some macro perspectives on what's happening here and what we could look for in 2019, since we're just beginning the year?
Here's some of the. This is obviously 4 minutes is very short term and day trader oriented. This here on the right is a weekly.
Okay.
What I was showing here, and have posted this several times, is using the ellipse. We found the bottom of the plunge here, to where we found support.
Yeah.
We found support here on a retest back here. We found support here yesterday, and we found resistance here yesterday. So you can see these ellipses work on a 4 minute time frame or on a weekly time frame, and they can help you define areas where the market's going to have to make a decision. Now, when it goes into that, I don't know what decision it's going to make, but I do know that, like here, when we reversed off of this, that was a good low risk buy.
Okay.
Because you had the support that held and then a reversal.
So what are the purple dotted lines that kind of look like multiple pitchfork or something like that, channels? What's the, is it possible for us, if we get through resistance here at one of your important pivots, that we could head up towards one of those purple lines above where you have the red arrow pointing down?
Yeah, so this yesterday was a big area of resistance, geometric weekly resistance right here on this crosshair. And we fail. If we make it through that and get on top, the next stop is going to be up in here, which is 2657 to like 2665 in that area. We get through there, then we're going up to here. Then we're going to 2780, 2750. So there's a lot of resistance in here. Talking about the macro view and the cycles, because that is my first love, is the cycles that we're looking for right now. Like the number one probability is that we're going to look at some sort of high in March. The retest high will be late March, early April. There's a major cycle cluster in that area, where if we keep holding these, the way that we watch this to give us a good idea is, can the markets continue to stay above the weekly super pivots? Are they staying above these super pivots? Are they showing strength in relation to these numbers that are dynamically coming in each week? If they are, it means that the models that are pointing up and the cycles that are pointing up have a better probability of coming through. And right now, everybody and their dog. My dog walked into my office the other day, looked at the chart and said, why aren't you shorting the ES here in the 2600 area? Everybody can see that.
That's what bothers me. Isn't that what bothers you? Yeah.
It bothers me. I posted stuff on Twitter about it, because if we can see it and everybody can see it, then the people who can move this market can see it too. And they're not going to.
You know what Peter said that was profound? I still remember it from the interview. He said the market's purpose is to convince you it's something that it's not.
Absolutely.
Isn't that great? Yeah.
Go ahead. One of my mentors told me something that I always think about too. He said, the market tries to hurt as many people as possible at a given time. So whichever way people are leaning, you got to figure they're going to push it just far enough to get them to stop out or do what they're doing, and then go.
Mean Mr. Market. He's really a mean guy, isn't he?
You know what? Trading is a hard way to make an easy living.
Oh my God. That's one of the first things I heard when I became a Series 3 broker in 77. Someone came over to me and said, kid, this is a tough way to make an easy buck. So they were right. So Peter, any view on anything outside the S&P? You know, there are some cycles coming in gold during the same time frame that you're talking about in March, April for the S&Ps, and I'm thinking it's going to be a low in GDX.
Tell me how to switch my screen, and I'll show you a couple other. I'll show you crude and gold and things like that. How do I change the screen?
Oh, you would shut it down, and then you could just change pages, or you could just close the screen share and then go to another screen. Yeah.
Are you seeing
okay.
crude now?
Yeah. Yeah, we got crude
so
up here.
All right, so here's crude. So crude, the dotted line and the solid line here are two of the super pivots. You can see we've been dancing around this one here and stuff below it. The bigger picture here, if we look at the weekly, look at all this resistance we got right up here at 54.30, 54.50.
Yeah.
You got the ellipse and the lines here off of the geometry. So there's strong resistance just ahead here. Doesn't mean we can't get through it, but it's a hell of a lot of resistance right there.
Okay. Let's look.
How about gold? Let's see gold. Hold on. All right, there's gold. Gold, on the other hand, has a nice amount of room to run up still. 1325 to 1340, 1350 before we see any meaningful resistance.
Interesting.
Here we're hugging right along the super pivot too. See how these things attract price, and then they'll reject price either way when it makes it move.
Yeah. Interesting.
The other one that everyone's talking about, which I want nothing to do with, but I'll put it up, pound USD.
Oh, okay. Yeah.
Here's the super pivot.
It's above it.
Above that, which is bullish. And look where we are here. We're above this crosshair, and we're above the geometry. We could go 30.50.
31, yeah.
If it really wanted to go 34, 34.50, if it really got going.
Great presentation. Yeah, what a great presentation. I'm really glad that you agreed to come on and be with us, Ben. Nice to talk to you about trading philosophies. I appreciate you sharing your journey, you know, so that people know that, you know, once in a while, when you get knocked down to the canvas, you have to have the will and desire to get back up again. And I'm, you know, wishing you and your partner a great 2019, and really appreciate getting to meet you. And the best way for people to follow you, Ben, is on your Twitter account. Is that the best way? They want to keep in touch with what your work is saying? Yeah,
what I put up here is this is something we're going to be launching in the near future, my partner and I.
Yeah.
Check it out. Come in, see it, look at it. It's going to be our work and the stuff that we do. We want to provide people with, you know, information that's actionable and stuff they can use. So.
Well, I appreciate it, and like it or not, Ben, you're my trading warrior brother now.
I like it. I like it.
All right. So really, I think if we ever had a conversation, you and I have a lot more in common than just trading. So really pleasure. I want to thank you so much. You gave us some pearls about some time frames and a look into cycles, and you give people hope that are struggling, that if they persevere and go through some introspection, that sometimes it isn't 3 strikes you're out, that you could come back to the plate and swing the bat again. So great interview, Ben. Thank you so much.
Thanks, Dale. Appreciate you having me on, and I'd be glad to come back anytime.
All right, buddy. Good hunting, and that's it for us here on Thursday. See everyone for TGIF. Remember, when you write the market, don't just count your pips, count your blessings. See everyone tomorrow. Good hunting the rest of the day. You're very welcome, Rick. Ben, Rick Reedy, really enjoyed the interview, and it's my mission and our mission to build up and edify traders every day. Let me just say, mission accomplished today. So adios. See you guys later on. Thanks again, Ben.
Take care, Dale. Bye-bye.